Hey everybody, Rob Maurer here, and today we are talking about some potentially huge news from the European Union around their plans for supporting the automotive industry, and in particular in those plans, electric vehicles. Yesterday, of course, we talked about France's Minister of Economy and Finance and France's desire overall to support electric vehicles. Today we're hearing from Bloomberg that, quote, the European Commission is set to promote a shift to electric vehicles as part of greening the economic recovery plan, end quote. I don't have access to the full article, but Christophe Baroud did share this from Bloomberg Terminal on Twitter. So the details behind some of what this shift might include are coming from a draft that was reportedly seen by Bloomberg News of a European Union document. They say that the European Union is considering incentives for car makers to produce and sell clean cars and investments in charging infrastructure for EVs as well. And this document reportedly said, quote, massive support for the automotive industry will put significant debt on future generations. That support must respect our youth's expectation on climate change and for a healthier and cleaner future, end quote. There are 4 points here on what may be included in a future support plan. They are saying that they may propose an EU-wide purchasing facility amounting to 20 billion euros in the next 2 years. They are also reportedly considering starting a clean automotive investment fund of 40 to 60 billion euros, as well as considering doubling their investment in charging infrastructure to build out 2 million public charging and alternative refueling stations by 2025. That's 3 out of the 4, and then the last one would be, quote, zero-emission cars would be exempted from value-added tax, end quote. Anyone that is in a country with value-added tax knows that that is extremely significant. All right, so let's break this down point by point, starting with the $20 billion purchasing facility. It's not clear to me exactly what that means. Is that a facility set aside to purchase clean vehicles outright, or is that to subsidize the purchase of clean vehicles, or is that a program to help facilitate people trading in older, more polluting vehicles to upgrade to newer, cleaner vehicles, like a similar concept to cash for clunkers? I'm not exactly sure, but no matter how we slice it, 20 billion euros is significant support. If we think that that is outright vehicle purchasing, and each vehicle costs 40,000 euros, that could buy 500,000 EVs. If this is a purchasing facility that provides incentives for purchase, and let's say that's a 4,000 euro incentive, so maybe 10% of the price of the Model 3, roughly rounding there, 20 billion euros would be enough for 5 million vehicles worth of incentives at that 4,000 euro level. That would be huge, and that's with a 4,000 euro incentive. If you're looking at a 2,000 euro incentive, that could be enough for 10 million vehicles. So the prospects there are very interesting. Let's say Tesla captures a third of that market. You could be looking at Tesla capturing the value of $7 billion worth of incentives, and that's probably a pretty conservative market share estimate. The next point is their Clean Automotive Investment Fund. They say that is 40 to 60 billion euros. Again, this is all potential hypothetical stuff. But yeah, I think 40 to 60 billion euros can build you a few gigafactories. I'm guessing that would be more to support the domestic makers in Europe. This will probably sound biased after saying that, but I'm not as big of a fan of that strategy because it can be difficult to track where those investment dollars are actually going. And then even if those dollars do make it to the right project, it's still high risk capital. You may get a negative return if the company receiving that capital doesn't invest it wisely, which so far from other companies, we haven't really seen a good return on their electric vehicle projects. Nevertheless, that is significant capital. The next point is on charging investment. Obviously, all of us believe that would be a good thing, but the same point applies there. That needs to be invested in the right technology that's actually going to be beneficial. Next is value-added tax. As with anything tax-related, it can be a little bit confusing, but the average value-added tax in the European Union is about 21%. Now, there are a number of different countries in the European Union that already offer electric vehicle incentives, 12 as of last check, and oftentimes those do relate to value-added tax already. If you want more specifics on that, I did find a helpful resource, the European Automobile Manufacturers Association. They have sort of aggregated that stuff, so I'll put a link for that in the show notes. But across the European Union as a whole, there are still significant value-added taxes being applied to electric vehicles. If we look at the Model 3 in Germany, for example, there's a value-added tax of over 7,000 euros. If that level of taxes is removed, that completely changes the game, and we've seen this before from Norway and their electric vehicle adoption. They lead the world in terms of adoption of electric vehicles, with about 55% of registrations in 2019 being plug-in vehicles, and about 42% of total registrations being all-electric vehicles. And one of the biggest reasons for that is because they waive the 25% value-added tax, among other taxes, that would apply to an internal combustion engine vehicle for EVs. So this has been tried before in Norway and has led to huge gains for market share in electric vehicles. That being said, I'm not sure exactly how much power the European Commission has on a subject like this versus the individual countries making their own decisions. Hopefully some of our European listeners can help us out in the comments. But from what I can tell online, transportation, energy, and environment all fall under the category of, quote, EU or national governments can legislate. They go on to say, quote, in certain areas, both the EU and member countries are able to pass laws, but member countries can only do so if the EU has not already proposed laws or has decided that it will not. In these areas, the EU has what the treaties call shared competencies, end quote. So my take on that is that the EU could either leave this up to national governments to control, which seems to be the current case, or there does seem to be some opportunity for them to write a law for the entire European Union. So again, not my area of expertise. We'll look to the comments for some more help on that, but really excited to see what may potentially come of this. That will wrap it up for today, though. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're following me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Wednesday, May 20th episode of Tesla Daily. Thank you.